Thank you for joining us. This is Credit King Steve on behalf of the Wealth Connect, and we are going to talk about credit. So make sure to grab your pen and piece of paper. Make sure to ask any questions that you may have, and we are going to get this ball rolling. So we will be talking about credit. Uh, Credit can be used for a few different things. Credit can be used when it comes to purchasing a building. Credit can be used when it comes to getting insurance, life insurance. Credit can be also used when it comes to buying a vehicle. So, we're going to give you some tips when it comes to credit and make sure that you uh, write these tips down, ask any questions that you may have. Also, if you need a consultation, make sure that you tap in with us to get a consultation. So be sure to ask any questions that you may have, and we're going to get this started. All right, council. All right. So, fix your personal credit with Credit King Steve. What you'll learn the introduction to credit, how credit reporting works, the five factors that determine credit score, how credit reporting works, and learn the credit bureaus, the impact of your credit score. Also, when it comes to looking at your credit score, make sure that you are not just using Credit Karma to look at your score. Make sure that you are using a good credit monitoring when it comes to looking at your credit profile. A good credit monitoring that I tell people to use is My Score IQ. My Score IQ, and this can be found on my electronic business card, but you can always just type in My Score IQ. My Score IQ will allow you to look at your true FICO scores. Many times when you're looking at a score on Credit Karma, number one, you are not you're not going to see your full credit report. You're going to see some of the things on your credit profile, but you're not going to see everything. So it's so important that you are looking at all three scores. You want to make sure that the information that is on your credit profile is actually yours. Over the time and over the years, you may move, or let's say that you may change jobs. Some people change names. Well, all of that information is reporting on your credit profile. So it's important that you make sure that only your name as on your license is on your credit profile. A quick, easy way to get anywhere from 15 to 20 points is by making sure that your name and address is on each credit bureau the same and making sure that it matches. If in 20 years you've moved 10 times, all 10 of those addresses are nine times out of 10 going to be on your credit profile. And an easy way just to get those points is by calling the credit bureau, making sure that they update your credit profile to report your current name and your current address. So make sure that you don't just have a lot of misinformation on your credit profile. You want to make sure that the information matches, that the information is yours. What is credit? Credit is the ability to obtain goods or services before making the full payment based on the trust the payments will be made in the future. So, when your credit profile is looked at, they have a short time to find out if you have credit worthiness or if you don't have credit worthiness. So they're going to be looking at the credit profile. They're going to be looking to see if you've been denied. They're going to look to see if there are a lot of inquiries on your credit profile. So you want to make sure that you don't run up a lot of inquiries in a short period of time, and you also want to make sure that if there is inquiries, that you do make sure to get those inquiries off your credit profile that are not tied to any open accounts. Never go and dispute a inquiry that is tied to an open account. And the reason you don't want to do that is because if you dispute that inquiry, it can close out that account. So that's why it's always good to get with the specialist, get with someone like myself. That way you can make sure that everything on the credit profile is correct and make sure that it matches. Make sure that you're even looking at a tri-merge report. That's another good thing about using a credit monitoring versus looking at Credit Karma. Credit Karma does not give you a tri-merge report, meaning all of your information from all of the reporting agencies on that credit profile. Also, too, if you ever go to a bank and let's say that you use a credit monitoring, your score is in the 700s, but the bank says that your score is a 600. Sometimes banks use old models, and they're using an old model to pull your credit profile. So there's different levels of FICO. FICO can start anywhere from FICO 5 and go all the way up to FICO 10. The newest is FICO 10T. 10T stands for trending, meaning that they are going to be looking at your credit profile for the last 24 months. And so you want to make sure that there's not a lot of inquiries, derogatories, late payments. Also, keep your debt to income ratio down as well. Credit scores are used to determine your risk factor for future loans. A three-digit score is a numerical representation which indicates how risky a borrower you are from a lender's perspective. A higher credit score can help improve the terms and conditions you qualify for. So you always want to make sure that your score is, I would say, at a 700 or above, especially when it comes to making purchases. Let's say in the future that you want to go and purchase that building or you want to go and purchase that home. You're going to be in that loan for quite a while unless you're paying the home or the commercial building off in cash. And so with being in that loan and that relationship with that financial institution or that lender, you want to make sure you're getting the best rates. You want to make sure you're getting the best rates on the front end. You also want to make sure you're getting the best rates on the back end because you are going to be making those payments. Why not get the best interest? So if your scores are anyway in the 360 to 580, number one, without even looking at your credit profile, that lets me know that we definitely have some derogatories on your credit profile. Some people that I talk to, they tell me, hey, there's nothing much on there. Or I looked at Credit Karma, I don't see much. Well, once again, Credit Karma only allows you to look at two credit bureaus versus three credit bureaus. So if your credit score is in the 360 to 580, you definitely need some help when it comes to the credit profile. If your score is in the 580 to 640, you still need some help, but your scores are better. You can get qualified for some things. And then if your score is between the 640 and the 700, which I call the sweet spot. That's going to allow you to get some of those best interest rates out there, and it's going to allow you to get those loans and credit cards at a better interest rate. Then we have the 700 to 750 and the 750 to 850, which is the best goal to be at. Also, when it comes to being a business owner, and Rodney had mentioned this before, you want to make sure that being a business owner that you are not using up all of your personal credit. So many times I see people run up their personal credit, meaning they're running into the ground because they're trying to get their first business off the ground. They're trying to grow. Maybe they're learning the steps piece by piece. No one have ever told them anything about business credit. And so that's the reason why we are here at the Wealth Connect, to give you a little bit of information about credit, give you information about business credit, taxes, marketing, as well as real estate, because a lot of these different things not a lot of people talk about. And then if they do talk about it, they don't tell you the layout on how to obtain those things. So that's one of the good things about the Wealth Connect, and the reason that we're here, to make sure that you are not left behind, especially when it comes to financial literacy. So a personal credit score can range between 300 to 850. A credit score of 700 or above is generally considered as good. A score of 800 or above on the same range is considered to be excellent. Most credit scores fall between 600 and 750. Higher scores represent better credit decisions and can make creditors more confident that you will repay your future debts as agreed. Now, let's look at this pie chart. This is credit, the five factors of credit, and this represents everybody's credit profile. So, this is one of the parts that I definitely want you to pay attention to. This pie chart gives you a breakdown of your credit profile. Two of the biggest percentages are payment history and amount owed. They total up to 65%. New credit is 10%, types of credit 10, credit history and length is 15% of your credit profile. So when it comes to length of credit history, you may hear some people say age. And so you want to make sure that you're building up age when it comes to your credit profile. The longer the card is, the lesser the missed payments, the better the credit profile looks, and as well as it helps the credit profile. So let's say that you have a few cards on your credit profile, and you have had a Lowe's card, and you've had that Lowe's card 10 years, but you have had a Best Buy card for 2 years. That length of credit history on that Lowe's card is really carrying the weight on your credit profile. So we never want to close out that card. If you do close out that card, it can hurt your credit profile, meaning your scores will drop anywhere from 30 to 50 or 100 points. So we always want to keep age cards. We want to have a diverse credit profile. We don't want to have all department store cards. We don't want to have all authorized users. We want to have some authorized users. We want to have loans, bank loans. We want to have some credit cards. We want to have a good mix of credit and trade lines reporting to the credit profile. Trade line can be anything from a loan, department store card, a credit card, a credit builder. And so this pie chart is something good to remember. 10% of your credit profile makes up for new credit. So if you know for a fact that you have not added any new positive trade lines on your credit profile, you're not going to hit that new credit 10%. And so amount owed, we want to keep our debt to income ratio down, meaning we don't want to have a lot of debt. Also, when you get ready to go into real estate, some of the factors that are going to play a part. Number one your income, salary, wage, contract income. That's going to definitely play a part. Credit is going to play a part with being able to get that home, and then amount owed, which sometimes you may hear people say DTI, debt to income ratio. So we always want to have a low DTI if our goal is to make a big purchase, or if our goal is even to extend and build credit. So a good tip for everybody: if you've had a card for over 3 to 6 months and your score hasn't been dropping, but you've been paying your bills on time and your scores have been going up, make sure, as some homework, that you call the financial institution and you ask for an increase on those cards. That'll help your credit profile. You'll get a boost in scores. You have more credit, and you will have a lesser debt reporting because now you have more credit than before. So, everybody that's checking this out, make sure for homework that you have a diverse credit profile, keep your debt to income ratio down, ask for increases on those credit cards that you had. That way, that can help your credit profile. Now, how reporting works. A good question. How reporting works. So, a reporting of your credit is, and a credit report is pretty much a financial report card. You get a report card for school. You make all A's or B's or C's or whatever. That information reports to your report card. Well, when it comes to your credit and it comes to missing payments, when it comes to making purchases, all of this information is reported to your credit profile. So you want to make sure that your credit profile is clean. You want to make sure that it's up to date. You want to make sure that it doesn't have misinformation. I've done consultations with people that there have been information or cards on their credit profile that was not theirs. And we have to work to get those off the credit profile. So, also, everybody talks about TransUnion, Equifax, and Experian, but there are at least uh, 30 other reporting agencies and bureaus out there. So, make sure, if someone is cleaning up your credit profile, that they're attacking all the reporting agencies and bureaus, not just TransUnion, Equifax, and Experian that most people only talk about. Three entities make up the credit reporting system: consumers, a person or corporation who purchases goods and services for personal or business purposes; credit bureaus, information about your credit cards, loan accounts, credit inquiries reported electronically through TransUnion, Equifax, and Experian by lenders and creditors about every 30 days. And then financial companies, a company concerned primarily with providing money as for short term loans. Now, companies like um, Afterpay and Klarna, companies like that, they used to didn't report to the credit profile. So when they first rolled out, they did not report to the credit profile. Well, it started getting so popular that they decided to build a relationship with the credit bureaus, TransUnion, Equifax, and Experian. And so now all of those Afterpays or Klarnas, other companies that are out there, they now report to your credit profile. So you definitely want to be cautious about using those companies and think that, hey, I can use these companies and miss a payment or not pay it. And then I got what I want, they got what they need. No, they will report it to your credit profile, and it will hurt your credit profile. So make sure, if you're using some of those companies, make sure that you are protecting yourself and making sure that you make those payments on time. Know the credit reporting bureaus. When creditors and lenders check your credit, they'll very likely do so with one of the major credit reporting agencies: TransUnion, Equifax, Experian. Um, it never hurts to ask a company that you're looking to do business with, or you're looking to get a credit card from, or you're looking to get a loan. And it never hurts to ask them what scores are they looking for. It never hurts to ask them who do they pull from. All companies are not the same as far as pulling to see if you approve. And then you want to always ask, who do you report to? So um, all trade lines are not created equal. Once again, all trade lines are not created equal. It feels like all trade lines should be created equal, but they are not. So I always tell people that it's good to use banking, financial institution, trade lines because they report to all three credit bureaus. Some companies they only report to TransUnion. Some only report to Equifax. Some only report to Experian. Some pull from two of those. Some only pull from one of them. So you want to make sure that you just ask those questions. That way you can be aware of where they pull from or who they're going to report to. If you've ever looked at a credit profile and you see TransUnion 600, Equifax 750, Experian 620, it's a good chance that a company that you do business with doesn't report to all three credit bureaus. They may only report to two. It's a good chance that, let's say, you miss some payments or something happened to show up on your account as a collection. It may just report to one of the credit bureaus. It may not report to all three. And so, normally with real estate people, they're pulling TransUnion most times. Most of the people that I deal with, brokers, realtors, they're most of the time using TransUnion. And also, people, they're going to pull your FICO score. So Credit Karma isn't going to be sufficient for any professionals that are in other institutions or other lanes. And so the FICO score is the most common score that most companies use. So we always want to make sure that we're looking at our credit profile and we're looking at it correctly, and that we're using a good credit monitoring, and that we're helping to educate people around us. It's so easy to feel like that this information is just for you, but trust me, there's somebody around you that's maybe not as knowledgeable when it comes to credit. Maybe they have heard about business credit, but they don't know exactly what it is. Maybe they've been in 10 or 20, been in business for 10 or 20 years, and they are funding everything with their cash flow, or they are funding everything with their personal credit. People, do not let your friends go out like that. Do not let the businesses go out like that. You want to leverage everything around you. The name of the game is leverage, and we want to leverage things around us. If I do business with Amazon, or if I have a business, which I do, and I already patronize with Amazon, why not look into an Amazon business account? That way I can free up some of my cash flow, free up my personal credit. Also, one of the uh, two biggest things that differentiate business credit and personal credit. Personal credit runs on a scale of 300 all the way up to 880, and business credit runs on a scale of 0 to 100 when it comes to the scores of business credit. So, when it comes to buying a vehicle, I always tell people personal credit can get you one vehicle, business credit can get you multiple vehicles. So make sure that you're tapping into business credit, and you're definitely using that. That way, it can be a separate entity. Some people think that their business credit and their personal credit is all in one, but it's not. Also, another good tip for people, and I was talking to a financial advisor. Please, people, if you're going to do the work of running a business, having that business run for multiple years, do not only look into a sole prop to build business credit, because it will limit you. Look into a LLC, S corp, or a corporation. Once again, you cannot build true business credit, or you cannot build corporate credit with the sole proprietor. So you can tell them Steve said it, Credit King Steve, that worked at the IRS, a former IRS agent, told you that you can't build business credit with a sole prop. Does that mean they're going to deny you? No. That just means you're going to be limited when it comes to funds and being able to tap into funds, and there's levels to it. So we want to make sure that we're aware of that. Also, when it comes to true business credit cards, you cannot add a person as an authorized user. That's another differential from personal credit and business credit. So with personal credit, you can add authorized users to a card that'll help their credit profile and boost the scores. But when it comes to the business credit cards, you cannot do that. Now, businesses such as auto loan lenders, banks, credit card companies, insurance agencies use your credit data from the credit bureaus to determine your risk level. Once they have an idea of how risky it is to lend you money, they can determine the rates you have to pay or other terms and conditions. So, I always tell people when it comes to personal credit, it's good to have five trade lines reporting to your personal credit profile, and keep it at two authorized users max. So that's the least amount of trade lines you need to be hitting your credit profile. If you only have one, good job. You're okay with that one, but we need more. If you have zero, hey, you didn't know, but now you know. Credit King Steve has educated you that you need to have some more trade lines reporting to the credit profile. When it comes to business credit, you need to have at least 13 trade lines reporting to be able to get that business score. So it's important that we know this information. It's important that we share this information. That way, people can be educated. People look at memes, and the memes may say, hey, you can get a tax ID, register it with the state, get a website, open a bank account. Now we got $100,000. Well, that sounds good. But if you don't have any cash flow, or if you don't have A1 personal credit, you won't be getting 100,000. You won't even be getting 10,000. The way that banks are tightening up. Also, for people that have been looking to purchase the homes, this is the best kept secret. Some good information to keep out in the know. They are going to be lowering rates. The feds are going to be coming in and lowering interest rates. So for all the renters, people that rent, number one, if you rent, you should be reporting your rent and self-reporting it as a trade line. Hey, that's a gem I just dropped. If you are paying rent, you can self-report your rent. But if you are a renter, this is the best time to get your credit up to par. You're wanting to become a homeowner. The feds are going to start lowering the interest rates when it comes to homes. So it's so important that you be aware of that. It's so important that you get your things together. It's so important that you go ahead and check your credit profile. And um, that's all for tonight. We'll be coming back in a couple of weeks to talk some more about personal credit. We'll talk about vehicles. We'll talk about different ways to purchase vehicles, how to free up your personal credit with purchasing vehicles. We'll talk about homes. We'll talk about interest rates. Also, be on the lookout for um, our a friend Tamara. She's going to be talking this week about taxes. Be on the lookout for Rodney. He'll be talking about business credit. Be on the lookout for Tamika. She will be talking about marketing, how to market your business, how to grow your business, educating you on things like having a logo. If you have a business page, but you don't have a logo, they're not going to hold your business page, Facebook page up for a long time. They're going to close that page after so long. Be on the lookout for Travis in the Wealth Connect. He will be talking about real estate. And make sure that if you need a consultation, that you get in contact with me. That way we can deep dive into your credit profile, come up with the strategy to get items off of your credit profile. Here at Onwenu Financial Services Inc., we do use artificial intelligence to get you the ultimate and quickest scores, meaning you'll get scores update every 15 to 30 days. So make sure you're tapping in with us. Make sure you're checking your credit profile. Make sure that you're helping the people around you to grow and stay blessed and let's build. Y'all have a good